Two AI stocks, two very different breakouts. Palantir up nearly 30% in a single day. 175 million shares traded. A gap up so big it left every channel line in the dust. And then there's Broadcom, up 6.5%. Quiet, methodical, finally breaking out after weeks of coiling. One looks like a rocket ship. The other looks like a textbook breakout. Which one is the real? If you're new around here, do me a favor. Hit subscribe. The free daily note is linked in the description. No paywall, no spam. Just the note. Let's start with the big mover. PLTR. Palantir closed Tuesday at $162.66, up 29.5% from Monday's close. The stock gapped up at the opened at 145, and never looked back. Ground higher all day, closed near the highs. Volume: 174.7 million shares. That's more than double the previous day. A massive volume surge on a massive price surge. But here's the thing. Price is now way above every single channel line. The long-term line is at $137.88. The midterm at $131.72. The short-term at $130.40. Resistance was at $142.61, and we closed $20 above it. RSI at 72.8, firmly overbought. This is the definition of extreme divergence. And when you see this kind of move, there are two ways to read it. The bull case for PLTR. Number 1, the volume confirmation. 175 million shares on a 30% move. That's not short covering. That's not retail FOMO. That's institutional buying, big money stepping in and taking positions. When you get this kind of volume on a breakout above resistance, it typically means the move has legs. Number 2, now the bear case for PLTR. Number 1, blow-off top pattern. A 30% single-day move on double volume with RSI near 73? That's the textbook definition of a climax top. When everyone who wants in is already in, who's left to buy? The most euphoric days are often the end of the move, not the beginning. Number 2, extreme channel divergence. Price is $25 above the long-term line. That's an 18% premium to trend. Stocks can stay extended for a while, but they always come back to the channel. My take on PLTR? I think the bears have the better risk-reward argument here. The move is too far, too fast. The divergence is extreme. And 30% single-day moves on double volume are more often climactic than sustainable. But, and this is crucial, I wouldn't short it either. Momentum stocks can stay irrational longer than you can stay solvent. The play here is patience. Let it come to you. Wait for either a pullback that holds support or a consolidation that builds a base. Don't chase, don't short, wait. Now let's shift to AVGO, the quieter breakout that might actually be the better setup. AVGO closed Tuesday at $418.16, up 6.6%. Volume at 29.5 million shares, about 70% higher than normal. Not the spectacle of PLTR, but here's what matters. Price is now above all three channel lines. Bullish alignment confirmed. Remember yesterday? AVGO was coiling, sandwiched between the short-term line at 388 and the midterm at 393. The range was tightening, volume was declining, and then Tuesday happened. It broke out. Clean, decisive, closed well above all three lines. Next stop? Resistance at $437.70. The bull case for AVGO. Number 1, confirmed bullish alignment. Price above all three channel lines. That's the definition of a bullish structure. When a stock goes from coiling below the midterm line to closing above all three in a single day, that's a trend change, not a bounce, a breakout. Number 2, clean volume pattern. Volume expanded on the breakout. 29.5 million versus 17 million the day before. Not a blow-off spike, just solid confirmation. The kind of volume increase you want to see on a breakout. Real, but not extreme. Number 3, AI semiconductor leadership. AVGO is one of the core AI infrastructure names. If the AI trade is back, and Tuesday's action across the sector suggests it is, AVGO is one of the first institutional names that money flows into. It's the quality play, the safe way to play AI. If the bull case plays out, AVGO grinds its way up to 438 over the next few weeks. Steady, low volatility, institutional money flow. Not a moonshot, but a high probability, definable trade. Now the bear case for AVGO. Number 1. Resistance isn't far away. $437.75. Here's the trade plan for each. For PLTR, stay on the sidelines. If you're long from lower prices, congratulations. Take some profits. Trail your stop. If you're not in, don't chase. Wait for either a pullback to the 140 to 145 area that holds, or a few days of sideways consolidation that builds a base. Either one gives you a level to trade against. Right now, there's no edge, it's just momentum. And momentum works until it doesn't. For AVGO, this is actionable. You can buy a pullback to the midterm line area around 393 to 395. That's your risk level. If it holds, you're in a confirmed bullish structure with 438 as your target. About 5% upside, roughly 6% risk. Not a home run, but a clean setup with a clear plan. If you're more aggressive, you can enter on weakness here around 410 to 415 with a stop below 400. But keep the position smaller. Risk board. Let's run through them. 1. PLTR blow-off risk. A 30% single-day move with extreme divergence is statistically more likely to reverse than continue. Don't underestimate how fast momentum can flip. 2. AI sector correlation risk. These two stocks trade on the same theme. If one breaks, the other probably breaks too. Diversification within AI is an illusion during sell-offs. 3. AVGO false breakout risk. One close above the lines isn't confirmation. The real test is the first pullback. If it doesn't hold, the coil is still in play, and it could resolve lower. 4. Gap risk on PLTR. That $20 gap from 125 to 145 is going to get filled eventually. It's just a question of when. And when it starts filling, it can happen fast. Bottom line. 2 AI breakouts. 2 very different risk-reward profiles. PLTR is the exciting one. 30% in a day. All the momentum, all the headlines. But it's also the dangerous one. Extended, overbought. Statistically likely to reverse. AVGO is the boring one. 6%. Clean breakout, well-defined risk. And boring is usually better for your P&L. Trade the setup you see, not the one you want. Don't chase momentum. Don't short euphoria. Wait for your pitch. Trade safe.